Hey everyone, welcome back to TalkTickers. We are your one-stop shop for all things earnings calls, and today we're going to be diving deep into Stitch Fix's Q2 2025 report. With me as always is the amazing expert speaker ready to break it all down.
Happy to be here.
All right, so Stitch Fix, for those who haven't tried it yet, there's a personal styling service using a mix of algorithms and human stylists to pick clothes just for you, like personalized shopping, but tech savvy. So what happened this quarter?
Well, let's start with the headline numbers. Stitch Fix brought in $312.1 million in revenue, beating their guidance, and their adjusted EBITDA landed at a solid $15.9 million, also exceeding expectations. Pretty impressive, right?
Okay, so they beat expectations, but by how much? Give us the details.
So their year-over-year revenue comparison improved by a whopping 710 basis points. Plus, their contribution margin hit 33%. That's their fourth consecutive quarter above 30%.
Whoa, hold on. You're going a little fast for me. 710 basis points. That sounds like a lot. But what does that actually mean for Stitch Fix?
You're right. Let me break that down. Basically, it means their revenue growth is accelerating significantly compared to the same period last year. It signals some strong momentum and suggests they're on the right track with their strategy.
Got it. And contribution margin, refresh my memory on that one. Why should investors care about this number?
Contribution margin is essentially the money left over from each sale after covering variable costs like the cost of goods sold and fulfillment. A higher contribution margin means more profit potential, and it's a good indicator of a company's pricing power and efficiency.
Okay, so a high contribution margin means they're keeping more of the money they make on each sale. Got it. That definitely makes sense for investors to keep an eye on. Now let's get into the why behind these strong numbers. What's driving this success, expert speaker?
One of the biggest factors is their focus on assortment improvements. They're bringing in more trendy styles, expanding beyond just clothes into categories like sneakers, jewelry, and accessories. They're even using AI to predict what each individual client might want, making their recommendations super personalized.
So they're basically getting smarter about what they offer, right? Using data to give people what they actually want before they even know they want it.
Exactly. And they're making their core Fix offering even more flexible. Remember how you used to be stuck with a set number of items in those boxes? Well, now you can choose up to 8 items per Fix, which gives you more control and personalization.
Makes sense. More choices usually equals happier customers. But I'm curious, didn't Stitch Fix build its reputation on human stylists with all this talk about algorithms and AI? Are the stylists being replaced by robots?
Not at all. In fact, Stitch Fix is doubling down on the power of stylists. They're investing in better tools to match clients with the perfect stylist, and even letting you see stylist profiles so you can find someone who really gets your style.
So it's not about replacing humans with machines. It's about using technology to empower the human stylists.
I like that approach.
Absolutely. They're finding that perfect blend of data and human expertise. But let's not forget about the elephant in the room, the economy. We're hearing a lot about inflation and uncertainty. How is Stitch Fix handling all that? Yeah, I'm curious about that too. Are they being forced to raise prices? Are customers cutting back on their fixes?
It's actually pretty impressive. Stitch Fix is managing these economic challenges. Effectively, they're protecting their margins. And more importantly, they're not passing those increased costs on to their clients. They're proving that they can adapt and thrive even when things get tough.
So they're basically saying, hey, we got this, and we're not going to make you pay for it. That's a good message to send to both investors and customers.
Agreed. It shows they're prioritizing long-term value over short-term gains.
Okay, we've covered a lot of ground, impressive financials, strategic moves, even economic resilience. But let's bring it back to what really matters to the investors. Expert speaker. What's the big takeaway here? What should investors be thinking about after this earnings call?
The big takeaway is this. Stitch Fix is showing that they're not just riding the wave of key trends, they're actually shaping them. Personalization, data-driven decisions. The power of human expertise. Stitch Fix is at the forefront of all this, and that's a very good place to be.
I like it. Sounds like they're in a strong position. So now for the fun part time to put on our investor hats and get a little creative. This is where we brainstorm some wild out there trade ideas based on what we've learned. Remember, folks, this is not financial advice, just some fun speculation.
All right, buckle up. Here's a thought. What if we went long on a call option for Stitch Fix, targeting a strike price way above their current trading range? We're betting that their focus on personalization and data-driven decisions, combined with their ability to navigate the economic storm, will send their stock price soaring in the coming years.
Whoa, that's bold. But you know what I kind of like? It's a risky move, but with their impressive performance and the trends they're riding, It's not totally out there.
Exactly. It's a high-risk, high-reward play, but one that could pay off big time if Stitch Fix continues on this trajectory.
All right, that's one wild idea down. Expert speaker, what other crazy schemes are brewing in that brain of yours?
Okay, how about this? We go long on Stitch Fix. In short, a traditional brick-and-mortar retailer that's struggling to keep up in the digital age. We're essentially betting on the future of retail, with Stitch Fix representing the innovative personalized approach and the brick-and-mortar store symbolizing the old way of doing things.
I love it. It's like a battle of the titans, old versus new. And I think you might be onto something as consumers demand more personalized experiences and embrace online shopping. Stitch Fix is perfectly positioned to win.
Right. It's a way to play the disruption happening in retail and bet on the companies that are leading the charge.
Expert speaker, you always bring the heat with those trade ideas. Remember, everyone, those were just hypothetical scenarios. Definitely not financial advice.
Yeah.
Now let's get back to the numbers and dive deeper into Stitch Fix's financials. We'll break down their active client metrics, revenue per active client, and those impressive gross margins. Stay tuned.
All right, let's dive into those numbers. First up, active clients. Stitch Fix ended the quarter with 2.4 million active clients.
That's actually down year over year, isn't it? I thought they were doing so well.
It's true, the overall number is down, but here's where it gets interesting. The newer client cohorts, the ones who joined since they rolled out all those experience changes last August, are spending more than clients who joined during the same period in the previous 2 years.
Okay, so newer clients are spending more. That's a good sign, right? What does that tell us?
It suggests that those efforts to improve the client experience, things like the increased Fix flexibility and enhanced stylist matching, are attracting a more engaged and valuable customer base.
So even though the overall active client count is down, the quality of those clients is improving. That makes sense. Now let's talk about how much each client is spending what they call revenue per active client, or RPAC.
Right. RPAC is a key metric for subscription businesses like Stitch Fix. They achieved an RPAC of $537 for the quarter, a 4% increase year over year.
A 4% increase, not bad. What's driving that growth? Is it just because they're offering more items per Fix?
It's more than just that. Remember all those assortment improvements and those stronger client-stylist relationships we talked about? Well, those factors are contributing to a higher average order value, which in turn boosts the RPAC.
So they're basically getting people to buy more and more expensive items within each Fix. That's a winning combination now. On to gross margins. These always make my head spin a bit.
Don't worry, gross margins are actually pretty straightforward. It's essentially the profit they make on each sale after accounting for the cost of goods sold. And Stitch Fix delivered a gross margin of 44.5% in Q2, up 110 basis points year over year.
Hold on, 110 basis points. That's like a lot of points, right? What does that mean in plain English?
It means they're becoming more profitable.
Yeah.
Several factors are contributing to this margin expansion. The higher average order value is a big one, but they're also doing a better job of managing their inventory and negotiating better prices with suppliers.
So they're increasing customer value and improving their profitability. That's impressive. Now let's dig a bit deeper into some of their specific initiatives. I'm particularly interested in their efforts to improve the quality of their assortment.
Absolutely. Their focus on bringing in more on-trend styles is paying off. Their keep rate for new inventory is up 7% year over year.
That's a good sign. It means they're getting the right products in front of customers, and people are actually keeping them. And I hear they're using some fancy AI to help with this, right?
Right. They have this game-changing AI-powered merchandising tool that analyzes mountains of client data, transaction history, feedback style preferences to predict what people will want. Helps their merchandising team make smarter buying decisions, ensuring they have the right products in the right quantities at the right time.
So it's like having a crystal ball that tells them what to buy. No wonder their keep rate is so high. What about private label offerings? Are they making their own clothes now?
They are, and it's working out well. Their newest labels. The Commons and Montgomery Post are performing well, with the Commons already becoming a top 5 revenue brand in menswear. They're also seeing continued success with popular national brands like Rory Marine Layer and Rhone.
It's smart to have a mix of their own brands, and popular national brands gives customers more options. And what about specific categories? Any standouts driving growth?
In women's wear, dresses and denim were the stars. Denim sales actually increased as a percentage of their overall women's wear business. And within dresses, workwear dresses saw a huge jump in sales year over year, over 60%.
Wow, 60%. Sounds like people are getting dressed up for work again. What about menswear?
Cashmere and performance workwear were the winners in menswear, with year-over-year growth exceeding 400% and nearly 150%, respectively.
Those are some serious numbers.
Okay.
Let's talk about those fixed flexibility enhancements they've made. Remind us what they changed and how customers are reacting.
They now let you choose up to 8 items in a fix, which gives you a lot more control and personalization, and the response has been overwhelmingly positive.
I bet more choices, happier customers, right? And it probably helps with their average order value too.
Exactly. More choices, more items kept higher order values, and they haven't forgotten about the human element in all of this. Remember, they're all about blending data with human expertise.
Right, the stylists. What are they doing to strengthen those client-stylist relationships?
Well, they've improved their algorithms to better match clients with stylists who truly get their style. They've also launched stylist profiles, so you can learn more about your stylist and get a feel for their personality and expertise. And guess what the percentage of clients requesting the same stylist for their next fix is at its highest level in nearly 5 years.
That's awesome. It shows that people value that personal connection even in the online world. Now, let's switch gears and talk about Freestyle, their direct e-commerce platform. How's that performing?
Freestyle returned to year-over-year growth in Q2, which is a great sign. They ran dedicated campaigns during the holidays to get people thinking about Stitch Fix as a shopping destination, not just a styling service. They're also using more sophisticated forecasting tools to expand their shoppable selection without having to hold a ton of extra inventory.
That's smart. So Freestyle is becoming a bigger part of their business, and it's attracting a wider audience.
Yep.
It's like they're offering the best of both worlds, curated fixes and on-demand shopping. But let's not forget about the economy. How is Stitch Fix navigating all the uncertainty and inflation out there?
They're doing a great job of managing these headwinds. They've maintained their pricing discipline, so they're not passing on those increased costs to their clients. They're also being very strategic with their inventory management, ensuring they have the right products in stock without overspending.
So they're basically saying, we're not going to let a little economic turbulence derail our plans. That's reassuring for investors.
Exactly. They're taking a long-term approach and focusing on sustainable growth, which is exactly what you want to see.
All right, we've covered a lot of ground here. We've talked about their impressive financials, their strategic initiatives, their ability to navigate the economic storm, and their optimistic outlook for the future.
It's clear that Stitch Fix is firing on all cylinders.
They really are. Now, before we wrap up this deep dive, I want to touch on one more thing that's been making waves in the retail industry. The metaverse. We're seeing more and more brands experimenting with virtual stores and immersive shopping experiences. Expert speaker, do you think the metaverse is a threat or an opportunity for Stitch Fix?
That's a really interesting question. The metaverse is still in its early stages, but I think it could be a huge opportunity for Stitch Fix. Imagine virtual styling sessions where you could try on clothes and accessories in a 3D environment.
Whoa, that would be so cool. It's like taking their personalization to a whole new level.
Exactly. The metaverse could also open up possibilities for unique virtual events, collaborations with designers, and even limited edition digital fashion items.
I'm already picturing my avatar rocking a digital Stitch Fix outfit. But let's be real, the metaverse also comes with its own set of challenges, right?
Of course, there are technical hurdles, privacy and security concerns, and the ever-evolving regulatory landscape.
That's true. It's a whole new world with its own set of rules. But knowing Stitch Fix, they're probably already thinking about how to navigate those challenges.
I agree. They've always been ahead of the curve, so I wouldn't be surprised to see them making a splash in the metaverse sooner rather than later.
All right, we've covered a lot of ground today, from Stitch Fix's stellar financials and smart strategic moves to their impressive handling of the economic climate and the exciting possibilities of the metaverse expert speaker. As we wrap up our deep dive, what are your key takeaways for our listeners? What's the big picture here?
For me, the biggest takeaway is this Stitch Fix is proving that personalization, data-driven decisions, and a focus on the human touch are the keys to success in today's retail landscape. They're not just surviving, they're thriving, they're agile, innovative, and they truly understand their customers.
I couldn't agree more. They're definitely a company to watch now. Before we sign off, let's have a little fun and revisit those wild trade ideas we came up with earlier. Remember, folks, this is purely hypothetical and definitely not financial advice. Expert speaker, remind us of those crazy schemes.
Okay, so our first idea was a long-term call option play on Stitch Fix. We're betting that their continued momentum, innovative approach, and ability to ride those key retail trends will lead to some serious stock price appreciation in the coming years.
It's a bold move, but hey, Sometimes you got to go big or go home. And what about our second outlandish idea?
Our second idea was a pairs trade going long on Stitch Fix and shorting a traditional brick-and-mortar retailer that's struggling to adapt to the digital age. It's essentially betting on the future of retail.
I love it. It's the ultimate showdown, old school versus new school.
Exactly. It's a way to capitalize on the disruption happening in retail and bet on the companies leading the charge toward a more personalized and technology-driven future.
All right, everyone, remember, those trade ideas were purely hypothetical and for entertainment purposes only. Definitely not financial advice. But they do highlight the key themes we've been discussing today: personalization, data-driven decisions, and the changing face of retail.
It's been a great discussion. I'm excited to see what the future holds for Stitch Fix.
Me too. They're a company that never ceases to amaze me with their innovative spirit and customer-centric approach. Well, folks, that's a wrap on our deep dive into Stitch Fix's Q2 2025 earnings call. We've had a blast breaking it all down for you.
Thanks for joining us.
And remember, you can always find us on social media or our website. We love hearing from you, so keep those comments and questions coming. Until next time, happy investing.